6 companies today, all significance 4 or 5, and some genuinely wild stuff. New activists, going concern resolutions, drone defense plays, and a printing company pivoting to digital assets.
Busy day. Let's get into it.
Raccoon, ticker 3031, just went all in on M&A. They divested their rent guarantee subsidiary and partnered with Advantage Partners.
Raised 2 billion yen in convertibles from AP's fund to fuel acquisitions. But the dilution risk is massive, up to 36.5% of outstanding shares if everything converts and exercises.
They also switched executive comp from operating profit to adjusted EBITDA. Classic PE playbook. Get management focused on the metric that matters for exits.
3D Matrix, ticker 7777, pulled off a real turnaround. Net loss of 2.5 billion to a 4.15 billion profit.
And the going concern note is gone. They fully repaid or converted those toxic convertibles held by Heights Capital. Equity ratio jumped from 27% to 67%.
Though a big chunk of that profit was FX gains from yen weakness. New CEO came from their North America division. U.S. sales doubled, so that makes sense.
One red flag, though. Japanese prefectures are rejecting reimbursement claims for their hemostat, causing purchasing hesitation domestically.
Kiowa Kogyosho, ticker 5971. Bolt manufacturer, and Old Peak Group just showed up with a 7.1% stake.
Activist alert for sure. Meanwhile, the company shifted its management philosophy from perpetual survival to sustainable growth. Sounds like they're already responding.
They're sitting on a huge hidden asset, too. Their Komatsu stock portfolio surged 62% to 3.2 billion. That's a real cushion.
But labor accidents spiked from 1 case to 5. Zero tolerance target completely missed. That's a safety governance issue.
Matsumoto, ticker 7901, a printing company. Brand new retail initiative fund became top shareholder at 9.93%.
The founder stepped down, son took over, board shrunk from 5 to 3. They sold 41% of their factory land and liquidated their entire stock portfolio just to stay liquid.
And the new strategy? A digital asset treasury concept, merging their school network with financial services. Seriously?
Core printing revenue fell for the 4th straight year. The net profit was entirely extraordinary gains. This feels like financial engineering wrapped in a crypto narrative.
Kikuchi Seisakusho, ticker 3444. They got Type 2 drone certification and entered the defense market.
Big deal. That unlocks government contracts. They also repaid all covenanted debt, eliminating going concern risk. Stock went from 392 yen to 1,870.
Founder handing the presidency to his eldest son, and planned capex surges from 80,000 yen to 510 million. That's a real expansion bet.
Watch affiliate Torshoku, though. Debt overhang doubled to 776 million, and their voting stake diluted from 19% to 8.6%. That's a ticking bomb.
Japan House Holdings, ticker 1873. They hit their 8% operating margin target, but leverage deteriorated badly.
Debt repayment years jumped from 3 to 9.5. Interest coverage fell from 19x to 6.4x. That's a significant risk buildup.
Hotel profitability pushed back to FY 2027, and they're pivoting into self-storage with the Happy Storage launch. 17 locations now.
New president came from Mizuho last year. The margin story is real, but the balance sheet is carrying a lot more risk than people realize.
2 going concern resolutions today. 3D Matrix and Kikuchi both cleaned up. And 2 new activist or fund investors at Kiowa and Matsumoto. Watch for follow-up filings.
Raccoon's dilution math and Japan House's leverage are the balance sheet stories to track. Thanks for listening.